Hi there folks, welcome to this week's weekly Forex Forecast. It's Monday the 23rd of May. Yes, you may have noticed I'm back in my London office. I was beaming all the way from Thailand last week from Forex Forecast. I'm back in the London office, no rest for the wicked. Right now, in order to access this weekly's Forex Forecast, just head over to the ForexSignals.com website. You can come to this landing page here. I think we've got an offer going on there as well for this week. Head over to this page here, scroll right down to the bottom, and here you'll see all our bells and whistles, free content and so forth. You'll see here just above my head it says Forex Forecast. Click on there and it'll pull up this landing page. Now in order to have this sent directly to your inbox, just pop your details in there. That way we'll send it to you the moment it has been released. Saves you having to keep checking back to see if it is out. I think it's a great way to start your trading week, to have an insight to what we're looking at for the week ahead. We basically map it all out for you, what we're looking at with some key trading potential opportunities. Right, so pop your details in there. But for now, let's just have a quick look in what's in store for this week and this week's opportunities. I'm looking at the euro potential reversal on the way. We've basically seen dollar strength over the last few months. A bit of a correction going on there now at the moment as the bond yields creep lower. Dollar is falling as well, coming back. The euro dollar is creeping high, broken out now through some key resistance zones, and now we're looking at the path of least resistance heading higher. So I'm looking at a euro dollar long trade. Now, of course, with the Euro Central Bank just around the corner, talking about interest rate rises as well, it's got the fundamentals and the technicals potentially for that. Now we've got a bullish reversal in stocks on the horizon. This is what our colleague Scott is looking at. He's looking at the S&P 500. He's bullish of that, and there's his reasons as well. Max actually has got a counter trend on that one. He's looking at the Dow basically trading lower into support at 30,650. It shows you there's two ways to skin a cat. Doesn't always have to align, but of course you should always be trading your own bias as well. But that's his reasoning for a short trade in the Dow. As always, we've got Shane mapping out the day ahead, the week ahead I should say, day by day, basically outlining what you should be looking out for. Even if you're not trading the fundamental news, it's a good idea to keep an idea of what's going on the news. That way you're not going to get caught out should there be a big sort of unexpected announcement. So keep an eye on that. It's a great way to start your week, as I say, to plan it ahead of the trading week. It should be part of your tool bag for Monday morning or Sunday night, depending of course on where you are in the world. Right, now let's jump onto the screens and look at my infamous momentum meter, show you what's strong, what's weak, and then we'll look at some other trading opportunities and of course the economic calendar in more detail. Come on. Okay, so let's start off the week in the usual place, and that's by looking at the momentum meter. Now, for those that don't follow me every week, let me explain exactly what this is. It basically shows me the strength and the weakness of the currencies that we trade. Now, typically we trade the 8 main currencies, and those 8 main currencies form 28 different currency pairs. Now, as a trend follower, I like to buy the strong currencies and sell the weak currencies. That's the edge that I have, I think, in the Forex markets. It's one of the reasons why I was drawn to the Forex markets all those years ago, because it gave me a bit more of an edge rather than just buying a single entity hoping it's going up or down. Here I can evaluate 2 components of the trade. So this momentum meter shows me what's going up and what's going down. Obviously it's past data, it's a lagging indicator. This version here is actually based on a moving average, which is a lagging indicator in itself, as you know. So it doesn't predict the future, unfortunately. If it did predict the future, then of course I wouldn't be telling you about it. I would be selling it to the central banks around the world. But there you go. So as you can see here, last week we had a big move lower in the US dollar. This is the green line. And you can see here the main beneficiary, or the main currencies that have been trading strong against this dollar decline, has been this currency here. And if you look at the color coding on the left, you'll see that this currency here is the Japanese yen. So the Japanese yen last week was gaining a certain amount of strength, came back towards the end of the week. The Japanese yen's been getting stronger, the British pound has been getting stronger, and the euro looks a bit complicated maybe here on the screen, but the euro in here at the moment has been reasonably flat. So basically you've seen some strength coming into the euro dollar, you've been seeing strength coming into the pound against the dollar, and of course you're seeing weakness in the dollar against the Japanese yen. Dollar has been in a decline. So why has the dollar been in such a decline? Well, for that we need to go and look at the bond markets. So this is a chart showing the US 10-year government bond yield. Now typically the currency markets should follow the interest rate of the particular country. That's why we look at the economic releases each and every day to give us a clue about the state of the economy. And the bond market does reflect the state of any particular economy. Now at the moment you'll see down here that the US 10-year yield at the moment is trading around 2.8. That's from a high of 3.2. So there's been about a 40 basis point drop in bond yields. That's one of the reasons why the US dollar has come into decline. Now, for those of you that follow my naked day trading strategy, that's the reversal strategy, you had a clue about that decline in the bond yields by looking at this pattern up here at the all-important significant 3% level. You often hear me talk about the naked day trading strategy. This bearish engulfing pattern gave us a good clue that the bond markets had reached a level in terms of resistance on its yield. And since then, as I say, we've had that big drop in yields and the dollar has followed suit. But interestingly enough, you'll see here on this chart here, it shows us the other bonds in comparison to the US dollar as well. Down here, you'll see the Japanese bond market stuck there at about 2.3%. All the other yields have been pushing up. But what's important, I think, to note here is that this euro, this pink line here, this is the German government bond, basically the euro. That's basically been in a steady incline, and that's one of the reasons why you're seeing some strength now coming into the euro. And of course, if you're following the analysts as well, ECB have already indicated that they will be moving interest rates at some point, potentially as early as July, and that's why the euro now is showing some strength. Another reason why you're seeing some pullback in the US dollar. The euro against the US dollar, of course, is the most actively traded currency pair on the planet. Okay, so now let's look at the dollar index. Now, the dollar index is basically an index with the dollar pitched against 6 of the other major currencies out there. I think the Swedish krona is in there as well. The main component of the dollar index is the euro. It accounts for about 58% or 60% of this index. And you see here now the dollar index, almost a mirror image of what you saw there on the bond yield chart, basically in decline. It's actually coming back down now to an important level of old resistance, which could act as support. I'm having to go back now, right the way back to sort of March of 2020, when we had this weekly chart showing the close around that level. I always like to look at the line chart when I'm plotting these big levels on the higher time frame chart. Anything with a big A or big V or double A or double V is a big level. I always take out the wicks and the highs and the lows because they could just be anomalies. So always use the line chart for that, and then back to the candlestick chart that allows me to pick my level. So at the moment we are closing in on a key level of support in the dollar index. If we break this level in the dollar index, well, we're going to be heading lower potentially. We're going to be heading lower, potentially back down to the 100 level. Just going here to the daily chart now and expanding that out. So back down to this level down here, basically where we started our ascent from. I always like to look at where the move really started from. And you can see the move really started from there. We were consolidating at around that level. And indeed, we broke through, retested, and off it went again. So if we break this level here now in the dollar index, then you could see a retest of the 100 to the 99.5 level back down here. Basically, this little pin bar here confirmed that this pullback into the previous level of resistance had stalled really. It gave us a clue there. That's another sort of a pattern I like to look at for trend continuation as well. So that pin bar there gave us a clue that this trend was going to be in play. As I say, a break of this support zone now could see a real test of these levels. And indeed, if that does happen, well, bearing in mind that the main component of the dollar index is the euro, then of course the euro dollar is likely to push up. Let's have a quick look at the euro dollar. Okay, so this is the euro dollar. Let's go back to the daily chart here. You can say the same as the reverse of the dollar index, because of course it's the euro pitched against the US dollar, broken through that level of resistance. Is now the path of least resistance is higher. Indeed, if we continue and the dollar index breaks through, then we could see the euro dollar make a good solid move all the way back up to 108. This is my next level of resistance. So for me, the bias at the moment, and this is only a bias, you can't go and trade that just because I'm here on YouTube talking about my bias, but my bias would be now for the path of least resistance to be up to 108, and my support zones would be down at around the 106 level. So if I'm trading that lower, I would need stops below the 106, position size accordingly, buying into pullbacks with a view profit target up there at the 108. I never know if, of course, my trade is going to be profitable. I always have to place stops and I position size accordingly so that I know I'm only risking a predetermined amount per trade. Intraday trading, I'm actually only risking 0.25% of my trading account. Some of you may be more. I hear some traders do up to 5%, but that's way too rich for my blood. I believe in the law of large numbers. I win some, I lose some. No one trade's going to make me, and no one trade is going to break me. That's my bias this week. The dollar is in steady decline, maybe likely to continue. Looking at some strength coming into the euro, some strength coming into the pound, which is all looking very good. For those of you that followed the weekly forecast last week, you'll see that I mentioned in the forecast this big trade that we had in the pound against the US dollar. I spoke about this because of this particular pattern that you saw down here. We came into a support zone. We put in this bullish engulfer on the daily. This again is the strategy that I teach. I've articulated it here on the channel a couple of weeks ago. In fact, go and check it out if you haven't seen it. It's a bullish engulfing pattern at support, giving us a clue that this downtrend is going to reverse on the way back up. And any of you that followed that from last week would now be looking at maybe 250 pips higher or so. So nice little trade signal there at support. One of the strategies that I teach. Now let's have a quick look at the economic calendar for this week. Okay, so head over to ForexSignals.com, go to the bottom of the landing page down here, and you'll see the Forex economic calendar, absolutely free to access. Even if you don't trade the news, I do think it's important that you know what's up in the week ahead. So A, that you don't get caught out on unexpected news events, and also there may be some money making opportunities for you in there as well. So just view calendar here. So this is Monday. Anything in red is high impact news. Bank of England governor speaking later today in the UK. Anything that's low impact is green. Anything that's high impact is going to be marked as yellow. So quite a quiet week this week. We've got some retail sales out of Australia overnight, for me anyway, depending on what time zone you're in. Then Tuesday we've got some PMI data out of the UK. Always keep an eye on the PMI data, especially as we build into the next ECB meeting. PMI is like a purchasing managers index. It tells us if the business leaders, manufacturing, service sectors and so forth, are they confident about the economy or are they less confident and so forth. And central bankers love a PMI data. All these things popping up at me. Let's close those down. So yeah, it's a PMI data. Keep an eye on that. We've got Lagarde speaking as well. Keep an eye on this now, because obviously there's lots of talk about the next ECB meeting being a live meeting where they may indeed move interest rates higher. So we want to get any clues we can from her. That's why it's deemed here as a high impact news release. We go out for the next 7 days. We've got RBNZ, that's the New Zealand Central Bank. They're going for a rate hike. Currently the rate hike is expected at 0.5%. So currently, previously, and that's where it is at the moment, it's 1.5. They're expecting a 0.5% move. And of course that is pretty much priced into the Kiwi at the moment. Again, Lagarde speaking again later on in the week. I don't know how significant that will be after obviously the earlier one. We've got durable goods in the US, and of course we've got FOMC minutes. That's the Federal Open Market Committee meeting in midweek, giving us a clue on what they're thinking. Remember, the dollar yield is coming down at the moment because of maybe because of some profit taking, but also the fact that they may be thinking that the central bank will maybe be less aggressive in their rate hiking cycle. Well, we'll get some clues from that on the FOMC meeting, and that which should be interesting. GDP out on the 26th of May as well, industrial production. So keep an eye on the economic releases for the week ahead. I suggest you maybe map this out on a Sunday night before the trading week so you know what is ahead. Okay, that's about it for this week. Okay, so I hope you found that useful. As I say, if you want to get this sent directly to your inbox, just pop your details in here and we'll send it the moment it has been released. Now, if you like the video, give me a thumbs up. Give me a thumbs down if you didn't. Leave a comment. Let me know what you want included in this weekly short video, and I'll see if I can fit it in. I'll read all those comments as well. Don't forget to subscribe to the channel if you don't already do so, and that bell notification will notify you the moment I release the next video, which, as you know, is a couple of times a week now. You can follow us on all the socials as per usual. Now, don't forget, we are streaming live around the clock, discussing opportunities as they unfold. So if you want to take part in that, you can do so. Head over to ForexSignals.com. Take out a 7-day free trial. If you want to stay, you don't have to pay. And I'm sure you'll love what you see. Lots of trading tools in there, as well as strategies that we trade as well. So well worth a visit, I am sure. If that's not your thing, that is not a problem. I'll see you next week. Have a safe week.